So many people overcomplicate ranges. The only range that you really need is the previous X range. If we're trading intra-week, we want to use the previous week's range. If we're trading intraday, we want to use the previous day's range. And if you are trading on the 5-minute time frame, you're going to go ahead and use the previous session's range. So here's a great example right here. As you can see, we've marked out our previous week range, which is of course Q2. Price then trades above it. We then form a cracking correlation on the lower time frame above the previous week high, because once we're above the previous week's high, this means we're at an extreme premium. So very likely for price to reverse when we're above a previous X high. So once that reversal has actually occurred with our confirmation, which in this case here would be the 4-hour inversion, price then closes below it before trading back into it one last time. And now what we're doing is we're using that previous week's range to find our targets. So you can see this gap here is slightly in a premium and slightly in a discount. Price actually filled the gap completely because the bottom of that gap was resting in a discount. So this is how you can know how much a PD rate is likely to get filled as well. And then of course, this is how you know which liquidity pools to target. However, now price has hit a discount, it can very much easily reverse and then continue trading higher. If we're using that previous week's range, this would now be our PD array that's resting within a premium, okay? This inversion gap. If you guys would like to know more about how to combine ranges with quarterly theory, comment the word live down below and I'll DM you access to my premium Discord.